China, a house of cards. An imminent collapse coming? Let's get into the data. Hello, this is Chart GPT today. You know, there's a common economic geopolitical theory out there that China is going to be the next empire ruling the world, and as the Western countries decline, China is going to be on the rise. That's what a lot of people have believed and still believe. Let's take a look at it. Is that true? Is China a house of cards and maybe even an imminent collapse coming? Or are they going to be the Asian tiger that everybody's thinking of? Well, let's take a look at the data here. First off, you take a look at this, and you can check out the links through the post in the description box on the website there. And back in 2012, The Economist had this prediction that in 2018, China was going to take over the U.S. They're close, but they're not there yet. U.S. about 25 trillion, China about 20 trillion. So they were supposed to be as high as 40 trillion. And of course, they're nowhere near that. So you can see how economists sometimes can be very wrong. But that was then, and this is now. So this is the current thinking on the GDP. Of course, there's that COVID down and up, and then, but you can see the gradual decline of the GDP growth rates in China is going down, and probably going down and get more in line with more of what other Western countries are at, which is around 1 to 2%. They'll still be greater than the others, but still growing well, but not near what they have in the past. Of course, you probably have heard all the rumors about these ghost cities and some of the GDP numbers coming out of China. It can't be believed. And it is dubious. Some of the data is dubious coming out of there. You can see a map here where some of these ghost cities are reported to believe. We won't get into that, but other than the fact that you can take a look at this housing bubble. We've seen a lot of crashes. Remember the Evergreen collapse a while back here recently, and you see the equity is coming crashing down in terms of the house versus the debt equity curve. So they're in a little bit of a housing crisis as we speak. They're having a lot of price declines there. When you look at the non-financial, which is non-banks but just a pure business, they're at 161% versus 84% in the U.S. So you can see that having an economy that's around 20 trillion versus 25, their debt structure is far higher than the U.S. So whatever you think of the U.S. in terms of how bad their debt structure is, China is at least twice as bad. And here's kind of the government public, and they're way up over 35, 40 trillion. And of course, they don't have near the tax base as the U.S. does. So their debt structure in China is far, far worse than what it is in the U.S. And of course, we know the U.S. is bad enough, but China is at least twice as bad as the U.S., maybe sometimes 3. Looking at where they're heading in the future here, foreign direct investment, these are the investments coming into China. China's hitting a lot of negativity in the global markets. Maybe it's jealousy, maybe it's people are angry that they're taking too much business. But the point is, the foreign direct investment, this is of money coming in to invest in China, is dropping off quite rapidly, and it has been somewhat in a decline for some time now. We look at the CapEx. Now, CapEx is the investment money to build new plants. You know, like if you're going to expand your economy, you want to grow that, and it's been clearly near the 40% area. Now, if you compare that in regards to other Western economy, Germany at 23, U.S. at 21, UK at 18, and they're sitting around the 40 area, they're probably, and if they have the same growth rates as their decline in growth rates, what you can see is that this percent of their economy, maybe at least half of that, that's 20% of their GDP, is going to begin to evaporate over the next 2 to 8 years, so to speak. So that's going to be a very severe recession. Imagine losing 20% of your GDP over a period of 2 to 8 years. That's going to be really rough. So what does the Chinese do? Well, that'll be a very strategic decision, geopolitical decision they're going to have to do here. Here's the kind of what internationally what people feel about them, and the views on China are not good. 67% have an unfavorable. A lot of people think they get good favorability ratings, but they actually have poor. You can see the numbers that it's not good in terms of interfering in affairs of countries. Of course, there's been a lot of accusation in the U.S. They contribute to peace. It says that, 71% say they do not, and they take in the account of others and other countries' interests. 76% say they do not. So they don't have a good vision of the world, and they're in a declining economy. Of course, internally, here's a chart on youth ages 16 to 24 unemployment rate, and it's way over 20%. So that's not a good thing. I think in the U.S. it's between 10 to 15. So they have a huge youth problem. And it's not going to be good for them, so they're going to have to figure out what they're going to do. But here's the kind of the cookie that messes the whole bunch here. They've had a rising population for quite a few decades now, and of course that is peaking, and now it's going to be coming off. So what happens when an economy has shrinking GDP, shrinking capex, huge debts, and a declining population to pay for that, and a rising aging population that are all looking to retire? So this is a house of cards for the Chinese with the debt structure they have to basically have huge changes in the next few years. Is a crash imminent? Well, I don't know. Give us your take in the polling on the website there in the description box. You can check out the links. Is China going to continue to have their tiger economy, or is it an imminent collapse, or will they begin to fade away like a lot of other tigers like Japan or South Korea? Give us your take on that. We asked the AI what its take on the growth prospects for China. Check that out as well on the post link. Don't forget to subscribe.